Hi everyone, today we're going to be talking about a stock called Revolve, which is a fashion stock, and as you can tell I've got the new microphone at last, so no more of the camera down there and we're back to normal, which is absolutely great, and I'll make sure I don't stand on my microphone again. But yeah, we're going to be taking a look into Revolve, which is a fashion company, and I don't really have any fashion companies. Well, I have JD Sports, so yeah, that's kind of a fashion company in my UK portfolio, but not really any kind of fashion company that's in my US portfolio. So that'd be a little cool entry point if I can find one. And we're going to be taking a look and seeing if Revolve is a stock buy today. So this suggestion actually came from the person who makes my thumbnails, which is called Ben. And Ben, I was talking on the phone to him, and he said, "What do you think of this company called Revolve?" And I've never really looked into them. I've heard other YouTubers talk about them and say some positive things about them. So I took a look into it there, and I was like, wow, this company's actually not too bad. And it kind of drew my attention to a company called Boohoo, which was a company I owned only a few months ago, and it was just completely sold off. And I was like, why is it sold off? It's a fantastic e-commerce fashion company here. And then sooner or later, it jumped up 85%, and I sold out for an 85%. So I was looking at this thinking there's some similarities going on with this and Boohoo. So I thought I'd take a look into how Revolve is doing overall and if this is a good buying opportunity right now. So as I'm making this video, Revolve is trading about $16. The ticker symbol is RVLV for this one. And like I say, it's a fashion company and it's e-commerce, so it's based online. Very much like a Boohoo, and it's aimed at women for sure. That's where it's mainly trying to get a lot of its revenue from, and it's basing it towards like millennials, Gen Zs, definitely the younger generation, and that's a good one to go for, because when I think about that, those are the ones that always like to buy a lot more fashion a lot often, so that's totally fine. And the way that Revolve kind of makes money is it uses Instagram influencers and it uses them to promote the products, which is a good way of getting that attention, that traffic to drive there. They've used Instagram most of the time, looking at other platforms, so they're kind of trying to use modern technology to promote the products that they do have. And the great thing about e-commerce is that there's just a lot better profit margins, and I think that's where a lot of fashion companies do need to move to. They do own several brands, but they're creating more of their own, and it's using technology as well to see what the upcoming brands are, which is fantastic. So they can be ahead of the game and start stacking up that inventory of the brands that are going to be really successful, or whatever the kind of trend is. They could be building up that inventory already for them sort of trends. Now, I am going to say that it needs to be building up some more of its own brands, because that's where the big profit margins are. So having its own brands in popular sectors is definitely where it needs to move to, and that's what it's planning on doing. So that's all good that it's moving in that right direction, because the last thing you want to do is have your products listed on your site, and then for it to be on another site, and you kind of like price matching and trying to see who goes the lowest on the search engine. So yeah, having more of their own products is where they do need to move to, which will be positive, but they are getting on the way there. When we look at the stock chart, it did IPO in June last year, so it's been on about a year, and normally I don't get into IPOs because they're just so volatile, and a lot of people tend to sell out because it's a lot easier to do it now the company's come public. So a lot of IPOs do tend to sell off like as soon as they're listed, and that's kind of happened with Revolve. Absolutely huge, it's down 55%, so you're getting this stock on a big massive discount since it's made its 52-week highs just recently after its IPO. Now, obviously, there's the IPO in there, but there's also some other things. So there was some bad earnings. There was two kind of bad earnings. One was a slight miss, which was like recent after the IPO. Another one was like the start of the year. They had a couple of inventory problems that kind of hurt profit. And then also the outlook wasn't great. So there's a bit of worry that they're potentially sandbagging the numbers. This was like prior to like the COVID-19. And then obviously the COVID-19's hit it. So that's another problem. But there was some inventory problems as well, and that's what caused it to go down. Nothing absolutely huge. So, should the stock be really, trading down 55%? It has kind of recovered since then. When it was down at $7, so it has come up a bit, but it's still way off what it was on its IPO price. Now, when we look at the valuation of the company prior to COVID-19, it did have a forward P of 22, which is fantastic, and it's a growth company, which we'll touch on in a second. But a forward P for a growth company at 22 is absolutely insanely cheap. Any of you guys that buy growth companies a lot will know it's very hard to find a growth company that has a forward P of 22. Compare that to something like a Etsy, something like a Stitch Fix. You're talking, a 50 forward P, even 100 forward P, so that's extremely cheap. Now, when we look at the earnings, they are looking to double going forward, and they've done fantastic previously. Revenue is set to grow about 20% yearly, which is quite good. You know, not many companies are able to grow 20%. And if you look at the past growth, it's been fantastic on the past growth as well. Balance sheet's good as well. It used to have a clean balance sheet, but it did take 30 million out loan because of the COVID-19 just to help cash flows. Fair enough. But even so, it's still got a fantastic balance sheet. You know, you look at the company, it's got 103 million in cash still. It's got 30 million in debt. So cash to debt is, 3 times cash to debt, which is fantastic. And if everything goes well through the COVID-19, then obviously it should be able to pay back that loan quite easy and have a clean balance sheet. The co-founder, which is Mike, is still there. There's 2 CEOs and they're both called Mike, which is really confusing. But one of them is the co-founder of the company. He's still there, and also the other CEO is called Mike. And both of them have been buying shares of the company recently as well, which is fantastic. You know, I'm a big fan when they buy shares because it seems like they know the company's going to get through what's going on and it's going to go up. Always a positive sign for me, so that's absolutely fantastic. And yeah, overall, I just, I like how the company does with how it, I see it like a mini Boohoo here, which is absolutely fantastic with how it uses, the influencers and how it's trying to see upcoming trends. Looks fantastic. I think management aren't too bad. I think they do a decent job. It's always good to have a co-founder there, which was really interesting in the earnings report, is that a lot of the management took big, massive pay cuts the last month. I think like the CEOs went to like $1 pay, which is absolutely insane. And the big thing I see here, as well as having more of their own products, is that the international growth, the international growth international sales only make up like 18% of the revenue. So ideally, if we get that to about 50-50, US 50%, international 50%, that'd be ideal. And it is the biggest growing sector, that international growth. It did grow 17%. So yeah, if international growth can carry on improving as well, that'd be absolutely fantastic from the company. But when you look at the growth that this company has compared to like the valuation, it's just extremely cheap, and I see massive potential upside in this company. So overall, am I going to be buying shares in Revolve? Well, I actually did buy shares. By the time this video has gone up, I will have bought my shares in Revolve. When I look at the company and how cheap it is, a forward PE of 22 pre-COVID-19, a company that's growing 20% revenue and very similar to Boohoo, I see this company, easily should be a $40 stock in a 2 years time. So for me, I'm looking for 100% upside in about a 2 years time is where I see myself making my money on this company. So yeah, I did buy some shares in this company. If you are on the Patreon group, the Discord group, I did post on there on Thursday saying that we're going to buy shares, and I did a big breakdown on the company on my Patreons group. So if you do want to get a little bit early notice of the stocks I am buying, it's all on there, guys. But yeah, I did buy this. Well, I have bought this by the time it's gone up. So yeah, on Thursday. So it looks like a really good company with a lot of upside from my kind of opinion. So I think it's a good little buy. It's a growth stock, so it's only going to make about 1% to 3% of my portfolio up. I have, I'm still building up that cash pile in case the stock market pulls back. And because of it being $7 recently, I don't think it would go down there. But if it did, I've left some room to go buy some more shares if the stock did go down from here anyway. So that's the video today, guys. Talk about Revolve. I hope you enjoyed the video. As always, if you can hit that like button, that'd be absolutely amazing. If you can subscribe as well, that'd be super. And I'll see you in the next video.